Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 16th, 2025, and we're diving into Morgan Stanley's second quarter earnings report for 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Morgan Stanley's performance, especially given the strong results they've reported this quarter.
Revenue and profitability overview. Let's start with the top line. Morgan Stanley reported net revenues of $16.8 billion for the second quarter of 2025, up from $15 billion a year ago. John, what does this tell us about the company's performance?
This increase in net revenues highlights Morgan Stanley's robust performance across its business segments, despite a mixed market backdrop. The net income applicable to Morgan Stanley was $3.5 billion, translating to an adjusted EPS of $2.13, which is a significant improvement from $1.82 last year. The return on tangible common equity was also strong at 18.2%, indicating efficient capital utilization.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 93 based on a survey of 7 analysts. Morgan Stanley reported an EPS of $2.13. How significant is this beat, John?
This is quite a significant beat, with the actual EPS surpassing the forecast by 20 cents. It reflects Morgan Stanley's ability to outperform market expectations, driven by strong performances in their institutional securities and wealth management divisions. This kind of performance can boost investor confidence and potentially lead to positive market reactions.
Wealth management and investment management. Moving on to wealth and investment management, Morgan Stanley reported net revenues of $7.8 billion in wealth management and $1.6 billion in investment management. What are the key drivers here?
The wealth management division saw a 14% increase in net revenues, driven by higher asset management revenues and increased client activity. The pre-tax margin of 28.3% is impressive, showcasing operational efficiency. In investment management, the growth was primarily due to higher asset management fees and positive long-term net flows, with assets under management reaching $1.7 trillion.
Institutional securities performance. Institutional securities reported net revenues of $7.6 billion. Can you break down the performance in this segment for us?
Absolutely. The institutional securities segment saw strong performance, particularly in equity, which reported revenues of $3.7 billion, up 23% from last year. Fixed income also performed well with revenues of $2.2 billion, reflecting higher client activity. However, investment banking revenues were slightly down at $1.5 billion due to a decrease in advisory revenues.
Strategic initiatives and shareholder returns. Morgan Stanley announced a dividend increase to $1 per share and repurchased $1 billion of its common stock. What does this indicate about their strategic priorities?
These actions reflect Morgan Stanley's commitment to returning capital to shareholders while maintaining flexibility for future growth. The new $20 billion share repurchase program underscores their confidence in the firm's long-term prospects. CEO Ted Pick emphasized the firm's focus on durable growth and long-term returns, which aligns with these strategic initiatives.
Key takeaways. In summary, Morgan Stanley delivered a strong second quarter with impressive revenue growth and a significant EPS beat. Their strategic initiatives, including dividend increases and share repurchases, highlight a focus on shareholder value. John, any final thoughts on Morgan Stanley's investment prospects?
Morgan Stanley's consistent performance across various market environments and their strategic focus on growth and shareholder returns make them an attractive investment. Their ability to adapt and thrive in different conditions is commendable.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Morgan Stanley's performance in the comments below.